David, well, have seen some strength coming back from the rand from those weak levels that we saw on Friday. Is this really risk appetite coming back into the market, do you think?
Hi, Stephen. We've got extremely thin markets, volatile markets, and as the sort of focus fell away from Dubai and as the authorities calmed a lot of the nerves, some of the export supply that we did see on Friday morning fed through into a very long market, long of dollars, and hence we've seen the rand come back very, very strongly. It's difficult to say at this point whether it's risk aversion, risk appetite. It's simply a matter of international factors driving the markets at the moment. The dollar weakened, over the weekend, and hence we see the rand back down at 740 levels.
Of course, we did have the central bank in the United Arab Emirates coming out over the weekend saying that it would provide emergency funding to banks should they need it. Of course, we are still waiting to see how this whole thing plays out. So do you think we could see more volatility in the days ahead?
I think we're going to see very choppy markets, Stephen. It's the holiday period is arriving very quickly now in South Africa. Liquidity is going to dry up a little bit, and I think we're going to overreact on either side. When we see strength feeding through into the equity markets or the dollar weakening, that will have an impact on the rand, and vice versa. When equity markets are weak, that will feed through into a weak rand, and we'll see exaggerated movements simply because the liquidity will begin to dry up.
David, there have been concerns raised about possible defaults in some other countries, including Greece, Hungary, Turkey. Do you think that this is really just bringing back the point that the global economy remains very volatile and very fragile at this stage?
Well, there's two schools of thought at the moment, Stephen. The one is, if we could survive sort of late 2008 all the way through to March 2009, we can really survive anything at this point in time. And that was borne out on Friday. Dubai's problem, anywhere in the region of 60, 70, 80 billion dollars worth of debt that they need to roll over. The market kind of took that in its stride once it had sifted through all the detail and said, well, compared to what we've been through, that's a minuscule amount. The other school of thought, obviously, is that we're not out of the woods yet, and should we see some more threat of default coming from other nations, then that will feed through into risk aversion again.
I mean, is there a chance there could be contagion from Dubai to the rest of the globe?
I think what we saw on Friday was a lot of the banks globally, in fact, a huge amount of banks came out and said that they've got immaterial exposures to Dubai, and that's kind of the responses that we're getting now internationally. When there's when there's a bit of a threat on the horizon, banks are very quick to come out and say that they're not exposed, or governments are saying that they're not materially exposed. And I guess it's going to take something pretty large to move the market focus back into any kind of recession threat, or in fact a depression. But at the moment the markets are taking these things in their stride simply because the authorities have been so quick to react to the news that we've seen.
Of course, we've seen our own bank's index down by 0.25% as we head into the afternoon here. Old Mutual on Friday said that it had minimal exposure through its US life arm. And the feeling really is that South African banks aren't really exposed to Dubai very much. Would you go along with that?
Undoubtedly, I don't think there's any exposure whatsoever. The local banks have got their own challenges on their hand as far as the debt write-offs that they're having to make. But I don't think there's any threat of huge international exposures. Certainly not to Dubai at this point.
Well, we do have some economic data coming out this week. It was kicked off by those credit extension and money supply numbers which were released this morning, and much worse than expected. Credit extension shrinking by 0.4% in October. And did that take you by surprise?
Well, I think ironically, low money supply numbers are actually rand supportive at the moment, simply from a perspective of internationally, central banks around the world are inflating their balance sheets, and money supply is such a big thing in the US and Europe and the UK. And low money supply in South Africa is quite supportive, because what that implies is that we don't need to do the quantitative easing that we've seen in the rest of the globe. As a result of that, we'll see money flowing into South Africa. But of course, that's just one of the criteria that the markets are looking at.
Mm-hmm. But also showing that there is very little demand out there from corporates or from individuals at this stage.
Absolutely. On Friday we saw a big supply from the exporters, but the local economy is still benign, and that's feeding through into the kind of action that we're seeing in the rand at the moment.
Well, we're getting the trade figures out at 2 o'clock. We had quite a big surplus in September. Is the market looking for another large surplus of that extent in October?
trade numbers are notoriously fickle in South Africa. I think as long as they're somewhere around the 0 point, if we do get another big surprise of a trade surplus, that will certainly have an impact on the rand. But they're notoriously fickle. It certainly depends on the timing of the releases, and not a big factor as far as the rand is concerned, Stephen.
Of course, we have purchasing managers indices out tomorrow across the globe. We have the ISM coming out of the United States. We also have that non-farm payroll data coming out on Friday. What scenarios are you looking at here, and how's that likely to impact the currency markets, David?
Stephen, I actually think we're going to see some positive numbers coming out in the next few sessions, in the next few weeks, and that's simply a question of what they're based off. One must remember this time last year we were just coming out of a disastrous 2008. We were reporting on those numbers, and compared to those numbers, anything right now is going to look pretty good. Last week we did see quite a good jobless claims number coming out of the US, and jobless claims have been feeding through into non-farm payrolls, so I'm expecting relatively good numbers that might in fact heighten risk appetite, but as I said, moving in towards the end of the year, it's going to be difficult to attract new investors.
So do you think with the dollar back above 150 against the euro, it will sustain that level, and of course that would also keep the rand at its current levels?
Yeah, I think so. I think as long as the news dissipates, the negative news from Dubai continues to dissipate, I think we'll continue to see weakness feeding in through to the dollar, and I think the rand will be attractive in the next couple of sessions.